Good morning, everybody. It's Monday, December 16th, 5:24 a.m. Central Time. Grain markets are higher to start the week. March corn futures up 1 3/4 at 443 3/4. January soybeans up 2 3/4 at 991. March Chicago wheat up 3.5 at 555 3/4. March Kansas City wheat up 5.5 at 562.5. March spring wheat is up 4.5 cents at 603. We've got some potential direct payment news. Let's start off there.
So, U.S. corn and soybean industry groups are seeking financial assistance for farmers. Congress has yet to release or vote on its year end spending package. However, congressional leaders have signaled that the package does not include aid for farmers. According to the American Soybean Association, farmers are in need of economic assistance to compensate for challenging markets and poor weather conditions. The National Corn Growers Association has stated that aid is crucial due to low crop prices and high input costs. Both groups are calling on Congress to resume talks and pass legislation that will provide vital economic assistance for farmers.
In addition to the American Soybean Association and National Corn Growers, Farm Credit also penciled a letter to Chuck Schumer, Mitch McConnell, Mike Johnson, and Hakeem Jeffries over the weekend, begging for financial aid. So the financial aid in question here is the Farm Act, which we have discussed in the past. And the initial proposal was essentially for direct payments. And it was direct payments to the tune of ballpark $20 billion. And this would be corn growers, soybean growers, wheat growers. Even a lot of the other crops had some direct payments involved in all of it. So just for reference, MFP, which was the trade war payments, that was $23 billion. They were talking $20 billion. I'm told there's news pending and that we're going to see some guidance today. The things that I've heard is that the next version of this or the next proposal's going to be a little bit more watered down, and there's going to be some more stipulations. There's, of course, going to be caps on what a given operation can receive. There may be some regional stuff because of things like the hurricane rains out east and things along those lines. We did a video with Paul Neiffer initially talking about the Farm Act. We did two videos. Paul explained it. And then what we did was we ran a survey of our premium subscribers. And, it seems like all these groups want this. Soybean growers want it. National Corn Growers wants it. Farm Credit, they want the direct payments. Do farmers actually want it? We ran a survey of our premium crowd, and 55% said, no, we don't want the payments. Why would that be, Mackenzie? Why would farmers not want direct payments?
Because they want to stand on their own?
Well, there's a lot to it, but those who answered no and said we don't want the direct payments cited things like this. Joe, this is going to further increase cash rents. It's going to keep the land market artificially inflated. If we do direct payments, it's going to keep bad operators in business. It's going to keep my competition who has acted carelessly in these markets and just with farming in general. It's going to keep them in business and keep them competitive with me. Whereas as I've done everything to stay competitive, it's going to keep the bad competition in business. Those who replied yes, which was still 46%, so it's not a big majority that said no. But those who responded yes, of course, yeah, we're in trouble. I mean, we're losing money. This is going to be the second year, maybe third year in a row that's not profitable for some of the growers out there. I don't have an opinion on this. I'm an outsider. I don't have the right to have an opinion on this situation, but the opinions are very strong. So if you guys have an opinion, should they be doing direct payments? Should they not? Drop it in the YouTube comments, and I'd love to hear what you guys think.
Some of Argentina's soybean areas are likely to see below normal rainfall during the next 2 months. Key northern areas of the Buenos Aires province, in particular, may see very little rain over the next 2 weeks. Soybean areas further north are likely to see more normalized rainfall. Meanwhile, rainfall across most Brazilian soybean areas will run above normal, with the exception of far southern areas that have been too wet recently.
On average, the soybean crop weighted average is going to see 61% of its normal rainfall over the next 2 weeks, so well below normal. And it is a case of kind of haves and have-nots here. The province of Buenos Aires, which is 31% of the soybean crop, looks to be very dry for the next 2 weeks. Whereas you go north to Cordoba or Santa Fe, those places, they're going to be a little bit wetter. Is the market going to care about Argentina turning a little bit drier? I don't know. Argentina is projected to account for 12% of global soybean production. They're the third largest producer on the planet, but they're a distant third. So say you take Argentina from 52 and say let's just assume this turns into like a real crop loss event. Say it goes from 52 down to 45. But Brazil ends up at 173 because their weather looks really, really good. They've got above normal rainfall expected just about across the entire soybean belt, with the exception of the far south, which has been excessively wet. So Brazil's in really good shape. I think Argentina could probably afford to lose some bushels because Brazil's probably going to pick up some bushels, and it may end up just being a net nothing. The market doesn't seem overly excited about this. Soybeans are up 2 cents here this morning. So we'll see what happens, I guess.
The funds substantially increased their net long position in the corn market last week. CFTC released weekly commitment of traders data on Friday. As of Tuesday, December 10th, large money managers were net buyers of 92,000 corn contracts. The net long of 166,000 contracts is the largest since February 2023. Funds were also net buyers of 15,000 contracts of soybeans and 3,000 contracts of SRW wheat on the week.
The positions that the funds hold in soybeans and SRW wheat are not of consequence. These are just kind of agnostic type positions. The shift in sentiment and the shift in the fund position in the corn market is substantial. The funds were net short 356,000 contracts of corn, which was a record back in July, and they're now net long, at least as of last Tuesday, 166,000 contracts. That's a big swing. And that the reporting period went through last Tuesday, which was the day of the WASDE report. So the WASDE report buying is included here. This happens every year. I've talked about this with the premium crowd a lot. The funds go long corn basically every year on a calendar year basis. And this year it happened at an odd time. Usually happens spring, summer would be your seasonal highs normally in the market and also in fund positioning. There's a lot it's more complicated than that. But now we're seeing this kind of late year buying spree, which is interesting. The fundamentals have shifted. USDA told us last Tuesday, hey, the demand's better. Ethanol demand's better. Export demand's better. A lot of this buying, of course, has been absorbed by farmer selling. The farmer, as I understand it, was undersold, put that word in air quotes, going into harvest and needed to play catch up. And I think that they did it last week when March corn futures got up into that 450 neighborhood.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of last week's premium videos?
My friend Lewis Stearns, who's an agronomist, joined me, and we did an agronomy mailbag for the first time last week. And the responses that we got from this were hugely, hugely positive. People love this. We had our premium crowd send in questions about agronomy. And why would you need somebody that's not your agronomist to answer these questions? I think a third-party, non-biased opinion is a good thing to have. And there's some stuff in here that was, I don't know a damn thing about agronomy. There was some stuff in here that is considered to be a little bit controversial, but we had some really positive feedback. Jim Urio was on Friday. We did Macro Friday, as we do every 2 weeks. We talked about signs of the top with regard to the stock market, but not only stock market, just a lot of assets like stock market, housing. You look at things like Bitcoin and crypto. There's just everything out there is at all-time highs, right? And there are some signals, perhaps, that Jim and I discussed that maybe we're getting a little toppy in some of this stuff. I don't know. If you want to see the premium stuff, go to standardgrain.com. Sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell anything else. The big thing that we may cover this week, and we've got a lot of good stuff coming out this week, but the big thing that we could cover is if there is some updated guidance on the Farm Act. Paul's going to join me, and we'll have something out next day with the details. That should be really good. Go to Standard Grain, sign up this morning. It takes about 30 seconds. We do Apple Pay, Google Pay, Cash App, all that stuff. Check it out today, guys.
New laws in several Brazilian states could weaken soybean restrictions in Brazil's Amazon. Dozens of environmental groups released a statement last week criticizing new laws that threaten to end the Amazon soy moratorium. The moratorium, which was established back in 2006, bans traders and oil producers from buying soybeans from deforested land after 2008. The new laws in Mato Grosso and Rondônia have removed tax incentives for companies that follow the moratorium. The environmental groups claim the laws punish companies that are committed to reducing deforestation. The groups are urging companies to continue to abide by the moratorium, even if it means losing millions in tax incentives. Two other Brazilian states and Brazil's Congress are considering similar laws.
You look at this, and I keep seeing these stories about the deforestation laws, and you would think maybe at some point Brazil's going to stop expanding soybean acreage, but it's not going to stop, guys. The percentage increases that you see every year may be reduced a little bit, but we're already to the point where they've become so enormous that it's really had a negative impact on the global soybean supply and demand situation. And a lot of people are going to respond and say, Joe, companies here in the United States taught them how to grow soybeans. And yeah, that's true. That's true. So be mad at whoever it is that you believe taught them how to grow soybeans. That's what happened, though.
Mexican cattle imports will not resume until next year. According to the USDA, shipments are expected to resume incrementally after the new year. Full resumption of imports will occur sometime after that. USDA originally reported that imports would resume this month. Cattle imports were halted back in November after New World screwworm was detected in a cow near the Guatemalan border. The USDA is using $165 million from the Commodity Credit Corporation to eradicate the pest from Mexico and Central America. The restriction of Mexican feeder cattle has further reduced supplies and boosted feeder cattle futures as well as feeder cattle sales.
Yeah, so this March feeder cattle contract is only about $5 from life of contract highs as of Friday. And I think that this headline, if the timestamp is correct here, it was out after the market closed on Friday. I wonder if this means feeder cattle or cattle open higher this morning. I don't know. I don't have a prediction. I don't have a prediction, but it'll be interesting. What else we got here?
We had a flash sale of soybeans on Friday. U.S. exporters sold 7 million bushels of beans to unknown destinations for delivery during the 24-25 marketing year. Current marketing year soybean sales are the 6th best in the last 10 years.
Yeah, demand on the export front has really improved. The question now is this: when and if Brazil harvests this monster crop or gets into this monster crop, do we see any cancellations? Does China cancel some beans? We don't know. It still looks all positive, but we're just trying to look a couple of steps ahead here. What did cattle do on Friday?
Cattle futures were mixed. Live cattle were 25 cents lower to 82 cents higher. Feeders were 50 cents to 90 cents lower. Cash cattle trade was higher last week. In the Texas Panhandle, cattle were $1 higher than the previous week at $191 to $192. Cattle were steady in Kansas at $191, and then cattle were $4 to $5 higher in Nebraska and the Western Corn Belt at $195 to $196. Box beef was higher on Friday. Choice ended the day at $316.39. That was up $115, and Select ended the day at $283.86. That was up $338.
Outside market's very, very quiet this morning. Really not a whole lot to talk about. Everybody have a wonderful day today. We'll be back on Tuesday.